Hey guys, thank you very much for coming. Thank you for joining. My name is Peter Redlingeis from Harenia Capital Advisors. Thank you once again for the guys who are here live and watching. Once again, you know the drill. I have a messy bird. She's asleep. She was very needy today. She didn't want to get off my shoulder for a long time. Any case, so we're going to start off with a number of disclaimers. Okay. One, I'm not a Bitcoin guru. Two, I don't advocate that anybody should go out and buy this stuff, right? I do think that there is an exceptional opportunity in Bitcoin, but I'm not saying that I have a magic formula that's going to make you $1,000,000. Anybody who says that is frankly an asshole, okay? Because nobody has a magic formula that just makes you millions of gazillions of rands and dollars overnight, right? Making money in financial markets of any sort is long, arduous process that involves a lot of research, involves a lot of time, and it involves a lot of practice. So there's no such thing as easy, quick money. And if later down the line you're watching this video hoping that this is some magical bullet that's going to convince you why you should just buy the stuff and hold it forever, this is not that video. All I'm going to be doing is sharing with you what my understanding of Bitcoin is, how it works, and my understanding of Bitcoin or cryptos as such is rooted in Bitcoin. I haven't looked at exactly the inner workings of all the various alternative coins that are out there, just predominantly looking at Bitcoin. And why I think that it's a pretty good opportunity to be buying. So we are seeing at the moment that Bitcoin is running up to $5,100 and something dollars at the moment. Slightly above that. It had been trading below $4,000 for quite some time. It is now Wednesday, the 3rd of April 2019, for reference. So yeah, Bitcoin's done yesterday. I did a rally of about $1,000 in a space of about an hour, and since then it's been grinding up the page slightly. So I must say that the opportunity that I think exists does not exist like now. Okay, the time frame in which this plays out is a number of years. This is longer term thinking rather than trying to think, like, I'm not saying, in fact, I firmly believe that we will not see Bitcoin rallying to 20,000 again during 2019. Maybe in 2020 is, likely 2020, late 2020 is maybe when we see that type of prices again. But my immediate call for this point is that we probably see 6,000, potentially even $8,000, and then a move back down to about 4,000 before the end of this year. So that's the call. Why do I make it, right? I think, chirp, shush. So I think we first have to understand what happened the last time around. Okay, so Bitcoin came around very shortly after the financial crisis of 2008, 2009, and imprinted on the first block is something, I don't know, it's a quote from one of the central bankers saying that they'll do whatever is necessary to bail out financial markets. And it's kind of like the ultimate up yours to the financial system, because it takes the central banking, economy or model that we live in today, and it kind of flips it on its head. So that I mean central banking has the ability to continuously print money and drive inflation, as where with Bitcoin, the number of coins ever in existence will be limited to 21 million. Now, there was some stories that they may have increased this cap to 24 million. I'm not sure if that's true. If you know if it is and you have like real solid proof, put it in the comments, join the Discord, share the information with us so that we can all learn. But as far as I know, and in terms of my most recent searches, I've seen that it comes to a grand total of only 21 million coins that will ever be in circulation. So, all right, I'm going to sort of go in a weird progression here, but let's start with why the bubble crashed in 2017. Okay, it's very sort of simple. I think while I do that, I'm going to put up this this fancy chart for you guys to look at, right? Ta-da, bang. That ladies and gentlemen, is the typical old school bubble chart, asset bubble chart. This is based essentially on the tulip charts, Tulip Mania. I don't know if you heard of it. I'm sure everybody who's an enthusiast of markets has heard of it. Basically, very many years ago, like hundreds of years ago, somewhere around the 1800s or whatever, the price of a bulb of tulip went like ballistic. You could buy, people were selling farms and all sorts of crazy, giant properties to buy like a tulip bulb, which is mad. So in any case, this is then now the sort of chart that's served as a blueprint for us since then on how asset bubbles work, right? So there's like say smart money on this chart. This is just stuff I'm pulling off the internet, guys. It's, you just Google the right stuff and you'll find it. There's sort of like a phase where they call it the stealth phase. Nobody really pays any attention to it. It's just kind of going. It kind of picks up a bit of momentum. Then people start getting involved. Institutional investors here in the space of Bitcoin. This is more like the miners and the really sort of techno-savvy guys that got involved because no institutions were touching it in the beginning. Then there's a bit of a sell-off, a bear trap. Then at some point it picks up, it rallies up, it takes out the previous high, and it starts going like crazy, and the media starts picking it up, and it starts getting in the news, and there's like this enthusiasm, and it's just utter fucking chaos ensues, and you have this like frenzy buying, and this thing runs multiples of what it was worth in a very, very short period of time, followed by the whole, that epitome of, and it's this typical stock market, fear and greed thing. It gets to a point where everyone's so greedy that it's going forever. Like what we saw in 2017 was some of the most ridiculous stuff I've ever seen. People selling cars for Bitcoin, and then they're doing that, and the price is trading at $18,000 a coin. And then, obviously the thing like that's unsustainable, right? So eventually the buyers run out. There's a bit of a pullback. That first bounce, everybody thinks, okay, this is it, leg two. We've seen this thing pull back violently all the way up thus far. It's going to go again. It doesn't quite make it, and we have this return to normal kind of situation where in this rally, everyone's like, oh, okay, don't worry, it's going to the moon. We just have to be patient. It doesn't do that. It takes out the previous low, and just panic sets in, and you have capitulation where they just dump it all the way down. And then you head into the despair mode. And I think that's kind of where we're coming out of at the moment. Because what we're seeing is, a whole bunch of things in the media again saying that, Bitcoin is dead, there's no use for it, this, that, blah, blah, blah. I mean, Twitter has gone dead quiet about Bitcoin. Everybody, the Facebook groups, there was one that's actually quite interesting that I was part of, or am part of, during the leading up to December 2017, the months leading up to that, man, that thing was busy like multiple times a day, After that, during this fear capitulation process, that thing was busy. And now, those things are dead. I'm the only guy that posted in there to, say, hey, I'm doing this video in days, or months even. Somebody posted like 2 days ago because, or yesterday, because the thing kind of had a bit of life. So someone was like, hey, is this hope? But other than that, it had been months. So people are now at that point where they feel like, it's absolutely dead. And that is where we kind of return to the mean, right? So this is the long-term trend where we've now kind of returned to. And again, now we enter into a stealth phase. Then awareness will pick up again, then public. So my thesis is that Bitcoin is a repeating bubble, okay, and that is based in a number of things. But let me tell you. Let's walk through the story. So we're going to go back in history. We're going to talk a little bit about what happened in 2014 and 2015. So coming into, we're going to talk about a lot of stuff. So coming into 2017, Bitcoin was trading at about $1,000, right? The beginning of 2017. So the previous year, it was kind of ranging between like $350, $300, $450, $400 in that area. Okay, it was doing a bit of a range. Prior to that, it had made a high at about $1,200. Okay, in 20, I think it was 13. So coming into 2017, we'd now just sort of hit $1,000 again. So that was kind of up like 100% from where it had been just a year ago, right? And then eventually it took out the high that it made in 2013 of 1,200, right? So now for the first time, people are talking about, now keep in mind where this comes from. This comes from the first person to ever buy something, you know, they paid like 80,000 Bitcoins or 10,000 Bitcoins or whatever it was to buy like two large pizzas. I think it was 10,000 Bitcoins for 2 large pizzas. Think about that, okay? It's like the world's most expensive pizza. So coming from the fact that this stuff is worth, you know, less than a cent to worth $1,000, that is like a huge move, right? And then it crashed all the way down. In fact, it pulled back 85%, right? It made lows. We'll go through the charts a bit later, but it pulled back all the way down to 85%. And then in 2017, at the beginning of the year, it kind of took out that high again. It took out 1,200. And now, you know, everybody that had been invested in this thing since then, that bought in the previous, you know, oh, it's going to the moon, had finally, and were brave enough to hold all this time, finally, you know, got their money back. So they just started just saying, yes, you know, that Bitcoin, like I made some money back, and this thing is, and you have this awareness phase again, all right, where people are starting to like understand it again and stuff, or, you know, people are starting to become interested in it. And on that sort of basis, it starts trending up. So then by the end of October of 2017, price is now sitting at $5,800 a Bitcoin. I mean, this is now like multiples what it was, you know, 2013. And it's, you know, it's came in at 1,000, it's at 5,000, it's like almost 6 times the price. It's insane. So people are starting to talk about it on the media, people are starting to talk about it in the news. It's even on the regular news, your hairdressers, you know, gym instructors, every single, you know, Tom, Dick, and Harry is talking Bitcoin. It is frenzy, right? People are selling at this point, not yet, but people are like just taking out loans and buying shit, you know, or taking out credit cards, maxing them on Bitcoin. Because everybody that they know or have heard of is making money on this thing. And at this point, people are still, you know, for real, making a lot of money on this stuff. Shush you. But not many. Okay, so there's 1 or 2 guys that were like clever, got in, whatever, and they're making cash and they're talking about it. And this is why the media starts picking up on it, and it starts heading into this frenzy, you know, phase. By the time it kind of is massive news around October, I mean, it rallied from 4,400 to 5,800 in a couple of days during October, right? I mean, this is now like, you know, like global news at this point. There's not a single person who doesn't know about Bitcoin. At this stage, I had like my ex-girlfriend's mom phone me up. Well, come November, right? But coming in beginning of November, we're trading at $8,000. Close to the end of November, we're touching like $18,000. And at this point, I've got my ex-girlfriend's mom phoning me and saying, "Oh, what do you think of Bitcoin?" And if you at that point turn around and say to somebody, "Listen, be careful. This thing is a bubble. It's going to burst," then you get, I mean, they want to stone you because you're a fool. What do you know? Oh, it's going to the moon. You know, you're a non-believer and you must be shunned. Obviously, the bubble burst after it touched just shy of $20,000, right? Because that buying was just absolutely unsustainable. So, like, to try and understand why that happens, I think we should start with what is Bitcoin, okay? Because if we're going to be investing in it or trading it with the view that it's going to go up again, first we must, before we can understand why it burst and how it burst and why it will go up and how it will go up, we must first understand like what it is, right? And stop me if you guys have any questions. So far it seems that there are none. But I actually just want to make that smaller, make the presentation smaller, check if there is any questions here. Nice to see SA Trader speak crypto. Okay, cool, Alessandra. Nice to Nice to have you, buddy. Okay, so so let's just look at what is crypto, right? I'm sorry about my bird. She's making so much noise. She's really cute. I want to introduce you to her. I'm going to start a channel just for her. She's going to be famous. Oh yeah. In any case, so this is kind of like and I've paraphrased here, a definition from Wikipedia. Okay, so it reads, Bitcoin is the first decentralized currency. Well, these are my own words, so it reads. Bitcoin is the first decentralized digital currency and a worldwide payment system. There are several exchanges around the world in which you can buy and sell Bitcoins with regular fiat currency, normal money. Fiat currency is normal money, okay? And it works on a peer-to-peer basis and is transferable without the intervention of a third party, okay? Or a trusted third party is the key words here. We'll get into that in a second. So essentially, Bitcoin is just software, okay? Software that creates a token that you can then transfer, a transferable token on a peer-to-peer basis. So think about, I don't know if you guys ever used LimeWire or if you guys used, I don't know, Pirate Bay, that kind of stuff, right? Where you do peer-to-peer sharing of movies. You think you're getting like a Disney movie and you open it and it's like not a Disney movie, or whatever the, you know, whatever it is, music, MP3s, Napster was one that was peer-to-peer. So you'd have stuff on your computer and you'd allow people to download it from you and you download from other people, right? So that's peer-to-peer sharing. So Bitcoin works in the same way, where you have a token that it creates that you can transfer peer-to-peer. And this is quite a complex little thing, because every token or Bitcoin are these tokens, right? Are just basically pieces of software code. And how it works is, and this is a bit complicated above my pay grade, so maybe if you have some cool links to explain private and public keys or videos and stuff, pop it in the comments. That'd be cool. But basically what happens is you have a public key and a private key, okay? So a Bitcoin is a combination of both basically pieces of code, right? Where you, as the owner of the Bitcoin, hold the private key, and the public key is the Bitcoin that's out in the world. Okay, so this is the code that anyone can see it, anyone can read it, anyone can open it, but no one can like decipher it because it's scrambled. Okay, it's like the same if you send a message via WhatsApp. You type a message on one side, it scrambles the message with a certain key, like a combination, scrambles the message, sends it off to the other person. That scrambled message can be intercepted, but you can't read it because it's gobbledygook. Once it lands on the other side, then it must be decoded by like a key, the private key. It must be decoded so that you can understand the message. So that's exactly what Bitcoin is. In your Bitcoin wallet, you hold the private keys to the tokens that are in public. So the public keys are exchanged, thrown around, no problem. That is a matter of public record on the blockchain, right? But the private keys are the pieces that we transfer to each other when we're transacting in Bitcoin. So that's basically just software, is what it comes down to, in the most simple sort of form. And it's open source software. It generates unique tokens, okay? And they can be transferred to anybody, anywhere in the world, using digital wallets and safe spaces to keep your private keys. You can even download the private key, take it off of your online wallet and keep it on a memory stick, or print it out, and it'll take about a tree's worth of paper because it's a lot of code. But you can, it's basically just like a code, right? Or software code. So as mentioned, this can be done peer-to-peer. So to give you an example, so you can transfer this stuff to and from each other without the intervention of a trusted third party. So to give you an example, you have person A who wants to transfer money to person B. But in order to do that, person A, I need to go to my bank, who has my money, right? and then tell them to send it to that person, to your bank account, to your bank who has your money. All right, so I'm using a third party, a trusted third party, to keep a record or a journal or an account or a ledger of all my transactions and all my things. So basically what they're measuring is they're measuring money coming into my account and where I send it. Where does it come from? Where does it go? Where does it come from? Joe. That's the lamest shit ever. But basically that's what they're doing. They're measuring input transactions and output transactions. And you are trusting the bank to do this correctly and accurately. Okay, and they do all sorts of interest calculations and whatever else. I'm just going to check Twitter here, sorry. Okay, blah, blah, blah. Lots of random stuff. Also, interesting fact. I wanted a Bitfinex account in the heat of 2017, and 48 minutes ago, I don't know if you can see that, 48 minutes ago, I finally got a reply saying what supporting documents I need to send. 2 years later. Well, a year and a half or whatever it was. I don't know, a long time. So, I don't know, I lost my train of thought. So basically what we do is we go to the bank. And the bank is this trusted third party, and they have a ledger of all the transactions that we do. When we receive money, they have a record of us receiving money. When we send money out to somebody else, they keep a record of where we sent the money to. And their bank on the other side does the same. And they do this behind closed doors. Nobody can see. It's private. Okay? And they do it on their servers, and we must trust in them that they are going to do their jobs correctly because, hey, they're banks, right? Bitcoin doesn't work like that. The idea behind Bitcoin is that I don't trust the banks. In fact, I don't trust anybody. So how best do I transfer money from me to you without having to go through some third party, where's my hand, third party between us, without having to, place trust in some stranger or some bank system that, now tells me what I can and cannot do. I want to send money directly to you. So Bitcoin is built around that distrust of everything. So what's the best way of doing that transaction? Well, in the open. Let everybody in the whole world see that I'm sending you money. And anybody who wants to, ask questions of where did it come from? Well, it's in a ledger. The bank keeps a ledger of all your transactions, that which comes in and that which comes out, and it keeps it behind a closed door. Bitcoin keeps that ledger, cryptocurrency, keeps that ledger in public. Right? It's a public ledger. Any single person can see from inception where that coin came from, where did it go first, then where, then it arrived in your account, and then you sent it to that one. So the nice thing about crypto is that in the beginning, it was, there's this irrefutable record of transactions, but you don't necessarily, you can send it to people anonymously. You don't have to know who the person is on the other side to receive it. You don't have to know, you could see that it came to this wallet, but you don't know who the wallet belongs to, right? And that was the key. Now, regulators, well, not so much regulators, but, exchanges are becoming self-regulated and wanting KYC and wanting to do sort of FICA stuff with people, so that if ever we get to a point where it is formally regulated on a global scale, then there's not a backlog of historic mishaps that have happened that they can say, hey, we've been self-regulating for a while, so we'll stick to the financial services rule set and just leave us alone, kind of thing. So in any case, so that public ledger is available for any person to see. What you're transacting in is these private keys. So I'm sending you the private key for a portion of a Bitcoin, because every Bitcoin that is created is divisible by 100 million pieces. The smallest piece is called a Satoshi. Satoshi is so named after Satoshi Nakamoto, who is the unknown creator of Bitcoin. Who he is, that's a whole series of documentaries to go down. I would recommend. It's quite a lot of fun. Nobody knows, basically, or she, or team of people. People think it's the same person who did Silk Road, but I don't think so. I don't know. It's very interesting sort of investigation to do if you ever have the time. So in any case, so every coin can be divided in 100 million pieces. So you don't have to send one coin, you can send 1/100 millionth of a coin. So at the moment you can't because it's too small, and the guys that are processing the transactions, we'll get to that, want a bit of a fee. So that's not really economical to be able to do, but it is theoretically possible, right? So, all right, then more features of Bitcoin. Every single Satoshi, 1/100 millionth of a Bitcoin multiplied by 21 million, right? That's a lot of Bitcoin. Every single individual piece is absolutely a unique piece of software code, right? And that piece is, I should maybe make it bigger. And that piece is completely like individually programmable, okay? So you can program every single individual piece to have a specific property. So this has all sorts of implication in terms of human rights, freedom of movement, freedom of choice, that kind of stuff. But you could program money in theory, and it's not money, and we'll get to that. But you can program Bitcoin to only be redeemable for a certain purpose. So if I employ somebody with a history of alcoholism, for example, nobody's going to hire a dude who's an alcoholic because he might keep drinking and then not come to work and do all sorts of stupid things because he's drunk all the time. So why don't you pay him with money that literally cannot be spent at the bottle store? You can program the Bitcoin to not be accepted by anything involving alcohol. No casinos, no bottle stores, no this, no that. You can pay somebody and say, I give you a medical aid allowance for medical expenses of 20 satoshis a month, which is equivalent to maybe $500 or whatever it is. Make up a number, $2,000 a month. And you're not allowed to spend that stuff on anything else other than medical expenses. If you can get medical aid for less than $2,000 a month, then the remainder you can save for a period of 5 years. If you haven't spent it on medical expenses in that period, I want it back. Okay? You can program the money to do that. You could program it to, or they can keep it forever, until one day when they're old. Then they have medical credits that they can spend for, frail care and stuff. Like, that is how customizable each and every single one piece of this stuff is, right? So the possibilities are truly sort of endless with what we can do with it. And Bitcoin is the first mover. There are other cryptos that can do even more cool stuff, So it's really like groundbreaking possibilities here of what can be achieved with it, or what can be done, right? So where does it come from? Okay, so and we'll get to why this explains the crash in a second. But so what happens is, in order to create Bitcoin, one must mine Bitcoin. What does mining mean? Mining is basically just processing transactions. Every day people are buying and selling Bitcoins to and from each other, exchanging Bitcoins for goods, exchanging money for Bitcoin, Bitcoin for money, blah, blah, blah. Like, stuff. You can buy stuff on the internet for Bitcoin. You can buy, a lot of people, Pick and Pay started experimenting with it, that you can accept Bitcoin at, like, for groceries. There's now even ATM machines where you can withdraw Bitcoin. What that ATM machine is doing is you're not withdrawing Bitcoin. You've got a Bitcoin wallet attached to a card. You make a transaction. It sells the Bitcoin on an exchange for currency, fiat currency. Obviously, there's layers and layers and layers of fees involved in that process, because trading Bitcoin is immensely expensive. Anyway, So you then exchange it, and it spits out cash in fiat currency for you. You know, if you're in the UK, it's pounds. If you're in the United States, it's dollars. If you're in South Africa, it's good old-fashioned ZARs. But basically what you're doing is you're just converting crypto to currency using an exchange on a live basis, right? So that transaction that takes place needs to be processed. Okay, so now what happens is this the whole blockchain sort of technology thing comes in. So what is the blockchain? Blockchain, once again, is just really open source software. Okay, basically that means that it is freely available to everybody, and the actual code is out for the public to see. Anybody can download it, anybody can access it, anybody can read it, anybody can change it, right? Although there are certain fail-safes built into the box, into the blockchain, that it is pretty much like impossible to hack. It's pretty much impossible to change the code of the blockchain without everybody on the blockchain agreeing to that. Okay, so how it works, and I wish I had cool graphics for this, but I don't. How it basically works is transactions are pooled into blocks of 2020 transactions per block. Okay, so how do I explain this? So think about it this way. There's a network of different computers. These computers are all connected to each other via the blockchain software, okay, the Bitcoin network. If I sit, man, I wish I had a diagram for this. There are different nodes in this network, different pieces, different computers all over the place. If you do a transaction with somebody, your money is sitting on this side of the equation and someone else's money is sitting on this side of the equation. You'll have to then bounce through a number of computers in order for this transaction to be processed, okay? Because your private key has to go from there all the way to there, right? And in order for that to do, it needs to flow through numbers of computers, and then they will keep a record of the transaction that takes place. So these computers sit in between different users and facilitate the transfer of these private keys, right? And then every 2020 facilitations or transfers that they've done, they say, okay, boys and girls, I here have a block of 2020 transactions, and I wish to call this the next official block in the blockchain. So the blockchain is basically group transactions in blocks of 2020 that are grouped together sequentially, and once a block of transactions is in the chain, it is irrevocable. It is irreversible, and it is deemed accepted by all, right? And then the next block is built, and then they add that block to this thing. So what happens is, if you send a transaction from one person to the next, sorry, the lights are getting a bit dim here. These guys are basically looking at input transactions and output transactions. So they're keeping that journal, the same thing that your bank is doing. So they're looking at the transactions that are coming into your wallet and the transactions that are leaving your wallet. And what they want to do is, when a transaction is done, they say, okay, you're sending this Bitcoin from your wallet to their wallet. But before we allow you to do that, we want to see, where did you get it from? And then that person who sent it to you, where did they get it from? And the person who sent it to you, where did they get it from? And they want to be able to trace the lineage of that coin all the way back to its beginning for every single transaction that takes place, so that there is no forging it. Okay, there is no undoing, there's no embezzlement, there's no money laundering. It is literally every single time that Bitcoin has bounced from one place to the next, that history is embedded in it. It comes with every single time, and that history obviously just keeps bigger and bigger. So for every computer on the network to evaluate every one of those transactions in real time is like impossible. Okay, because every transaction that takes place, it has to check every transaction leading up to that transaction and that transaction in order to verify it. So what happens is, an individual node or computer on this network, or miner, would do that process for 2020 transactions. It would check every single input for those transactions, for those coins, in the whatever random weird combination they are, to end up where they are and then be sent on to the next person. And it would check the entire history for every single one of those transactions for 2020 of them. And once those are now verified, they need to be placed in this sequential chain, because what happens is you can't possibly do all the previous stuff every time. So you have to have it in blocks. So you have to say that, okay, at the last block, this is the full history of the blockchain. So any new transactions come after this. Anything before that we can trust is accurate, because that has been verified by one computer and by every other computer on the entire network. That particular block has been verified. So we can't keep verifying all the previous stuff every time. We at some point have to trust that the previous block is correct, and we just then verify the next block, right? And they verify all the blocks, and then when eventually everything's verified and everyone's happy, they stick it onto the chain, and then they start processing the next block, and they stick it onto the chain. And this process repeats about every 10 minutes, okay? So now, this is where it gets interesting. So you have a number of different computers that are competing against each other in order to have the next official block in the chain. Because if your computer finds that block, you get rewarded in Bitcoin. In the beginning, it was like 50 Bitcoins per block. Every 50 minutes, 50 Bitcoins. I mean, every 10 minutes, 50 Bitcoins. Bang, 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 right? So that verification, everyone, any computer can now go ahead and verify the transactions. That's not a problem. But now what you've got to do is you've got to jostle for position to get your block of transactions as the accepted official next block in the chain, right? And in order to do that, you have to solve an algorithm, and you have to solve it first, right? So now we have computers that are competing against each other. They get given some more of a long equation, and the answer must be 1. Right? And they've got to substitute one variable in this giant equation, as many times as it takes in order to solve this equation. It's just like the easiest sort of example I can think of, right? And whoever solves that first wins the block or finds the block. And that computer is then rewarded, new Bitcoin is created and put on that wallet, whatever wallet is linked to that node, and created and put on that wallet. And that's then the origin of those new Bitcoins. And every 10 minutes this is happening, okay? So that's why people mine, because they are literally processing other people's transactions, jostling for position to get their block put into the chain by solving this complex algorithm. And if it's accepted, they get rewarded in Bitcoin. And that's the prize, okay? All right, I'm just going to pause there for a second. Any questions? Any questions? You're wanting the formal name? Okay, let's see. Can I talk to like other cryptos like Ripple next time? I can look into Ripple, Kev. Where is my... I've lost it. Oh no. Right. If you're wanting the formal name and rules based on transactions methods, you are called smart contracts. Can be written to cryptos. Oh, right, okay. All right, so Alessandra in the YouTube chat saying that if you're wanting the formal name for the rules-based transactions that I was talking about, this was quite a while ago this comment was made, they're called smart contracts, and they can be written to cryptos like Ethereum and Cardano. Okay, so that's the customizability of how this stuff works. Okay, cool. So we're going to keep going. So now what happens is you have a race, basically. Bitcoin is rallying like mad. The price is going up and up and up. And you can mine it. And if you find a block, you get like 50 Bitcoins. Okay, then it wasn't 50. It was less. I can't quite remember exactly what it was. But you get a significant amount of Bitcoins. I think it was like 12.5 or something. You get 12.5 Bitcoins, and the thing's trading at $8,000. I mean, are you joking? You stand a chance to get 12.5 every 10 minutes. Holy crap! I'm gonna go out and I'm gonna buy me a big fancy graphics card and a specialist Bitcoin mining thing, and I'm going to stick my mining equipment on the network, and I'm going to chow through electricity, and I'm going to, literally just mine. And if I find 1 or 2 blocks a year, yes, I'm sorted. So obviously higher prices attract more manufacturers. This is economics 101. High demand or high prices brings more supply into the market, right? So people enter into the market space and they start mining the stuff, and more people come with better and better equipment, and competition gets tougher. So now Bitcoin is also clever like that, because it is designed to allow for the difficulty of Bitcoin to be adjusted as time goes by. So this is bitcoinwisdom.com. It's a cool website, shown to me by Cameron. If ever you watch this, thank you, dude. So there's like a hash rate versus difficulty kind of thing. So this stuff is a bit too complex. I tried to understand what like the hash rate is and whatever, and it's like really higher grade advanced mathematics and like coding and stuff that's just way beyond my pay grade. Okay, but basically in a nutshell, it boils down to it is how difficult it is to solve a block, right? This equation that you have to do, how hard is it to solve that equation? The difficulty of this equation automatically adjusts by the number of people that are trying to solve it. So the more people are trying to solve this equation, the more computers there are competing to solve the equation, the more difficult the equation becomes. It's just how the software is designed. And as I said, the software is open source, so anyone can change it, but nobody can change it unless everybody agrees, and I bet you ain't nobody going to agree on changing it, right? So it's, for all intents and purposes, like, you can't change the way that it works, because you literally have to have the majority of the people on the network agree, and that'll never happen, I don't think, at least. So in any case, so this difficulty adjusts when price goes up, more people enter, more miners enter into the network. When more miners enter into the network, competition stiffens up, so they make the difficulty higher. Price keeps going up, more people keep coming, price keeps going up, more people keep coming. Eventually, it's like more of a difficult to mine the stuff, right? And if you're an American or a non-South African, more of a difficult means very difficult. Basically, eventually, it's so difficult that if you do not have the latest, greatest, best machine around in town, you don't stand a chance. In the beginning, people were mining the stuff with laptops. Now, if you were to put your laptop on, you would run your laptop hot 24/7, and you would never mine a Bitcoin. I mean, the chances of you mining one is like so small, it's unreal. So, or mining a block, actually. So this is also, there's a whole bunch of things where people get, involved in mining pools and pooled mining and that kind of stuff. And there's obviously tons of scams going around and that. So just be very, very careful. If you do ever decide to join a mining pool, don't fucking, do some stupid bullshit website that you saw. Oh, you could just earn money every day by just giving us your credit card details. No. You want to go and see the equipment. You want to physically buy your own machine and plug it in with them. You don't want to be involved in some. Be very careful, guys. So in any case, so more and more people enter into the market. The difficulty gets more difficult, and now eventually you've got the guys who are sitting with older equipment. It's now 2 or 3 years old, that are but running their stuff at full speed. They're now spending extra money because they've got to they had to buy cooling systems, and they got to run the cooling stuff, and that's all electricity, and it's expensive to run all this. They're just consuming power and spending it on processing and cooling and all sorts of crazy, and they're just not mining anything. And at some point, it's a business, like, it's not making any money. Guys, let's pack up, let's turn the computers off, let's sell the Bitcoins that we have to recover costs. Let's cash out. And there's suddenly there's 2 things happening. One, you've got mom and pop and personal trainer pawning cars and rings and all sorts of stuff to buy Bitcoin. Eventually no one's going to be left to buy the stuff. And 2, all the sort of archaic older miners are now, switching off and cashing in, basically. And bang, you're in a space where you have oversupply. Market comes down a little bit, interesting side note, during 2017, more volume was done between sort of October and December in Bitcoin of 2017 than collectively in its entire history up to that point. So you got a lot of speculators and punters and grannies and ex-girlfriends, moms, and all these people who just don't know anything about even what it is, except that it's magic money from the future that's going to the moon, and they panic, and pop, and that's kind of the end. That's kind of the end of the thing, all right? So okay, questions. Do you think I'm wrong? I think is a good question that I want to ask you. So far I see nothing. So all right, we'll get to that. Just want to check the prices. Network error. Oh, reconnect. Come on, baby. I believe in you. Okay. So magic money from the future that keeps going to the moon. So there's only ever going to be 21 million coins, which is relatively important to note. So what happens when all the coins are mined up? Well, because the difficulty keeps getting more and more difficult, or easier and more difficult, it's reactive. What happens also is that every 4 years, the reward for mining a block is halved. Okay, so let's just go through this site first. So what you can see here, block generation takes about 9.9 minutes per block. This is 7-day-old data, so unfortunately it's but they reckon that we're gonna see the next sort of adjustment in the difficulty. Well, if that was 7 days ago, we got about 3 days to go before difficulty adjusts again, right? So in any case, so we have I'll close that one. Every 4 years, the reward for mining a Bitcoin is halved. Okay, you can't be making 50 of these things every 10 minutes for all eternity, because you'll never then get to 21 million. So here we have on bitcoinblockhalf.com, we have a countdown timer to the next halving. So what this basically means is that at the moment you are earning 12.5 Bitcoin per block that you mine. So if you find a block, you get rewarded with 12.5 Bitcoin, and that happens every 10 minutes, right? Somebody finds a block. So now in 416 days, 6 hours, 46 minutes and 51 seconds, 50 seconds, 49 seconds, it's built into the software. Oh, I don't want to swear, but I can't. It's built into the software. Every computer will know that it is time. The reward, the Bitcoin that is created for finding a block, goes from 12.5 to 6.25. Okay, you can't cheat the system, because you again have to convince everybody that this is what you're going to do. I'm just going to adjust my shindig here. Ugh. My hair's getting long. I need to cut it. So that goes from 6.25 to shush man. From 6.25 to from 12.5 to 6.25. So at the moment we can see there's 17.6 million Bitcoins in circulation. Only ever is going to be 21 million. We've already got like 84% of the stuff. The Bitcoin market capitalization is currently $90 billion. And there are 570,051 blocks, and there are 2020 transactions per block. Blocks remaining until mining is halved, another 60,000 to go. Approximate block generation time 10 minutes. Approximate blocks per day 144. So there are 144 times 12 Bitcoin being introduced into the market every single day for the next 416 days. 12.5, that is 1,800 new Bitcoins every day for the next 416 days until 24 May 2020. Okay, remember that, because that's important. Every 4 years the mining reward halves. So this kind of links, we'll get there, okay? All right, so where are we? I've made notes here. I just want to make sure that we are still on track. Okay, so oh right. So what happens when we get to the point where we're now at like 20,990,000 Bitcoin, and there's a couple of thousand to go, and by now the Bitcoin reward for finding a block is like, it's going to get smaller and smaller. If it keeps halving and halving and halving, I mean, the joke of the guy who goes into the bar and he orders like it's like some infinity mathematics joke, and I can't remember it. I've gone completely stumped. But basically, if you keep halving it, you will never reach the 21 million. It will never happen. It's like a logarithmic curve that it will go on. It'll get infinitely close to 21 million, but it'll never actually touch 21 million, right? So at that point, there's no real incentive for people to keep mining this stuff, right? Well, then they can charge a transaction fee, a facilitation fee. Like your card charges you 2 or 3% when you swipe your credit card. Well, they don't charge you, they charge the per merchant selling you your packet of cigarettes. Oh, I'll have this item for R5, please. Okay, 3% of that goes to the bank. $100, $3 to the bank. That's what it costs. If you do really high volume, you're lucky, you might get 1.8%. But they take their, pound of flesh every time you do a transaction. So if you have a network of peer-to-peer people who have control over setting their own prices on an individual basis, if I have a miner in my house, there's no more Bitcoin practically to be mined, but I still want to make money from my piece of hardware. Hell, I'll compete with everyone else and put my transaction fee as low as possible so that people will route their transactions to me because I can process them for cheaper than anyone else. And okay, I obviously got to compete for space on the next official blockchain to be able to process the transactions, but it becomes a very interesting different business than just processing transactions for a fee. So you could get transaction fees to come way down compared to bank transaction fees, and you can transfer money, Bitcoin, cryptocurrency, like anywhere, right? So that's what's in it for the miners in the long run when we now get infinitely close to 21 million. Cool. Questions, guys and girls? None yet. Okay. Oh, wait. Any in the Discord? Nope. Okay. Right. So the software's made it more difficult. Okay, cool. So now, all right. So now we have the situation where all the miners were squeezed out of the market. The price collapsed. Cool. We've now covered the blockchain halving. We've covered basically how the stuff is done, right? I'm just trying to make sure that I didn't skip anything before I move on. Okay, cool. So now it is interesting that in 2009 Bitcoin came around, and in 2013 was its first significant spike, and then in 2017 was its next significant spike. Because those are 4 years apart. I did the math. So yeah, that's very coincidental, isn't it? Because every 4 years the Bitcoin reward for finding a block is halved. So what does that do? Just think about it from this perspective for a second, right? I buy a machine that I pay $100,000 for, and I run this machine at a cost of 10,000 Rand a month electricity cost, and this machine generates 2,000 Rand a month. Okay, so it takes me 50 months to get my money back. Okay, well, no, it takes it takes 20. Don't do maths on stream. I've seen gamers say that, but I've never now I understand why. Point is, it's a business. Okay, I have a certain capital cost that I had to put down. I have input cost to run my electricity, my cooling, all sorts of stuff to run these transactions or to process these transactions. For that, if the price is relatively stable at say $4,000, I know that I make a margin because I in the current environment find maybe 2 or 3 blocks a year, so I make a certain amount of money every year, and my margin on my input cost and my setup cost is a certain percentage. Now what suddenly happens is that come 24 May 2020, my output halves, but my input does not. So my production cost just doubled. Okay, so what is that going to do to me? Well, it's going to ram me really hard, right? I'm trying to be polite. It's going to be really bad for business, okay, is what it comes down to. So what am I going to do? Well, my input cost hasn't changed. I just now have half the amount of product I used to have before, so I guess I could maintain the same margins if I don't know, doubled my price. And that's what happens. So every 4 years, there's a supply side shock where supply just evaporates, okay? Because what happens is, and believe it or not, people are actually using Bitcoins, right? So like, people are like actually using it. I don't know if there's a metric where we can see the number of transactions a day, but what we do see is a ton of people saying, well, the banks do more and blah 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 whatever. But that's, yes, all of that is true. Bitcoin is new, not a lot of people are using it, and there are many alternative currencies. But you can also say that people are using it because people are starting to use Bitcoin ATMs. People are starting to use Bitcoin for online purchases. Bitcoin for online purchases is great. You can wire money, which is the cheapest, to an offshore provider or whatever the case is. You buy it there, or you buy it through a local guy, CoinDirect, Luna, whatever. There's options. CoinDirect is way cheaper, guys, by the way. CoinDirect.com, in case you're wondering. There's liquidity issues, though. That's the problem. But the fee structure is way lower. So I think that if we just get people to go, wait a minute, the fees are lower, then maybe there'll be more liquidity on that exchange. But anyway, so people are using this stuff to make online purchases. It is really way safer. I don't have to give out my credit card details to anyone. I can make a normal bank transfer into a thing. I can buy crypto with it, and with that crypto, within a couple of minutes, I can make my online purchase. Yeah, okay, it's a bit of a loss. It's a long way around and whatever, but I can keep my money in crypto if I want to for a while. I can receive crypto. I can pay in crypto. Like, it really is like a viable option for a lot of people, and people, actually use it. So there is this residual, consistent demand for stuff for transactional purposes, for people, I don't know, buying porn on the internet, or ordering shoes from Japan or whatever. People are accepting Bitcoin, often on a peer-to-peer basis where it's like classifieds and that kind of stuff. But there are websites dedicated to trading various items and exchanging it for alternative assets, So people keep using that stuff, and suddenly supply just halves, So you have a space or a situation where you would reliably be able to buy your coin for $4,000, and suddenly, like, one fine shiny day, nobody's willing to sell it 4,000 anymore. So you got to go to like 4,500, and then shit, there's not a lot of volume there either. So you have just this eruption of price, because there was a huge supply side shock where the supply of the stuff halved, because the people who are producing it are suddenly producing half for the same amount of input cost, so they double. So you have this massive shock, right? And this happens every 4 years, and that happens in 2013, which is 4 years after it started, and 2017, which is 4 years after that. Wow. Okay, well, actually, it's not 2017, it was 2016. And then the next year it went parabolic. And it wasn't 2013, it was 2012, and the next year it went parabolic. But the point is that these rallies coincide with a period after the halving of the blockchain. So the blockchain halves, and there's that initial supply side shock where price very rapidly jumps up, right? And that is when we enter into this phase. When that price jump happens, we enter into this, bang. Okay, so we take out the previous high from the previous rally, 2013, we take out at the beginning of 2017, right? Or we take out we sort of approach in 2016. The break to push through that price happens because of this supply side shock. Boom. Suddenly, oaks have to people have to ask for higher prices. So there's this immediate sort of like surge up, right? That is enough to get it onto the radar of, holy shit, I just made a lot of money on Bitcoin. Can you believe it? It's going up. Blah, 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 blah. And there's just like the frenzy just rebuilds. And then you have the bubble again, okay? It's a bubble. It's going to keep repeating itself. I found something very interesting, actually. And this is years ago, okay? So this was 2014, this chart was created. And this is the Bitcoin chart plotted on a logarithmic or nonlinear regression, okay? And it takes into account how many Bitcoins are in existence over time, plus the mining block, the reward for the halving of the stuff, the halving of the blockchain reward, and what an estimation as to what the value should be based on what the input costs, not input costs, but like the difficulty of mining the thing, the scarcity of what's left. What should the sustainable price be in order for it to be viable to mine, and only be rewarded like 6.25 Bitcoin maybe once a year if you're lucky, and actually mine it profitably, right? And this plots that on a linear regression. And what I think is going to happen, and this, I have no idea who made this, is a Bitcoin address that says, please donate Bitcoin to this address. I don't even know if that's the guy's real address. So I haven't done it, obviously. I ain't giving my Bitcoin to nobody. Well, I'm going to sell my Bitcoin a bit later, but anyway. So, and then this is like an updated version of this chart. Okay, so somebody came in here in 2017, late 2017, before like the giant, when it hit 10,000 actually, so before it went to 20,000, and just plotted sort of the rest of the price up to here. So it'd be cool if we could plot the rest of it. Maybe I should ask somebody to do that. In any case, so what I think is going to happen is we're going to walk this line. It's a technical analysis term for something that's, moving around a moving average or a support level or whatever. So it's going to walk the line, and it might do 1 or 2 standard deviations on either side. So it overshoots, pulls back, it comes to the line, pulls back. It's like a few standard deviations below, overshoots by a few above, comes down, overshoots again, pulls back. And then here, obviously, 2017, we overshot to about 20,000, which you can see, it can go a bit more. So if we, 2018, we sort of come from here, so we're probably now back in this, undershot it again a little bit, a few standard deviations down, and we might come up a little bit. And it's going to take some time, right? So we're going to, this valuation sort of metric forecasts prices for the thing into the future, but it's not obviously 100% accurate. It got pretty damn close though, with this $10,000 a Bitcoin call on the 22nd of November 2017. It was out by like 3 days or something. It's fucking ridiculous. But in any case, so I think that we're going to walk this line, and we're going to do it a few standard deviations on either side, and we'll overshoot. When we're supposed to be at $10,000, we traded through to 20,000. When we're supposed to be at 100,000, we might not quite be there. But you can see like it kind of slows down before it gets there. But this is a logarithmic scale, so it starts with 1, and it's eventually it's $10, and then $100, and then $1,000, and then 10,000, and then 100,000, and then $1 million. So it gets like exponentially bigger, right? So I think that is basically the base case of what is going to happen, that we have a number of different things. And to give you a example, just to walk through some charts, we're going to look at this chart over here. I'm just going to see how many of you are still here. Okay. Because I'm going for drinks with Simon just now. Ha! I don't want to be here all night. But I'll be here as long as it takes. So, yeah, okay. So here we start, and this is unfortunately when investing.com's data starts. It's hard actually to find reliable historic data. Bitcoinwisdom.com is really good, but those charts are not cool to use. And then bitstamp.com is actually pretty cool. They've got this new beta trade view thing, which is basically trading view. But it's not like the Rolls-Royce version, well, I wouldn't say that investing.com is the Rolls-Royce version either. Like there are some functions that are not here, but it's got less functionality than this. So this is much better for me to look at it. So in any case, so we start at 2012, and we have this rally. So we got this sort of gradual slope, and we have this like kapow, right? From like $12 to $230 in the space of, what is that, like the first quarter, okay? I mean, that is huge. Followed by, you guessed it, that is 70% down, okay, in a short period of time. Then we have this like sort of, just for the sake of comparison, let's do that. Does it look similar? Wait a minute. How about now, Governor? Does it look similar? Similar. Yes, it does. All right. So we have then this kind of movement again. And we have like this huge sort of around 80% correction. It's not, obviously, I'm not going to draw this as accurately 100%, but that's around 71% down, okay, from the high. Then we have this like little sideways thing. Oh, wait a minute. There we go. Boom. It's now November 2013. So this was the high, takes out the previous high. There is a spike from $0 to $12 in the years before this as well. But like I said, that data is like really kind of difficult to find. That's easy to chart. Anyway, here we have this like takeout of the previous highs that it made like in the years before. And it takes it out, and it's sort of just then in the last quarter of 2013, bang, it just goes absolutely nuts, right? And it peaks at around 1,150. So this is Bitfinex data. You could probably, there's lots of different exchanges, so the prices vary. So in any case, here you have 1,150. Let's call it around 1.2 as the high, and we have le pop, bang, right? Bang. And I mean, it's painful, right? So let's just go here. Let's go to that point there, right? Look familiar? Oh yes, Governor. First takeoff, right? First sell-off, bear trap, media tension, boom. Sound familiar? Sort of the first thing, bear trap, media takeoff. I mean, I don't know if you guys remember 2013. I remember it was the first time I moved to Cape Town. I was working in like a little niche asset manager in Tiger Valley waterfront, and man, this stuff was all over Bloomberg all the time. Bitcoin. I even bought Bitcoin for the first time then because of a friend of mine that said to me, hey, like, have you heard about nerd money? It's called Bitcoin. You need to get some. And we thought we were clever dicks. We bought it $3,000 or $300, and I think we sold it $900. We were like, oh, it's the best thing ever. When it got to 1,200, we felt like tools, and then a year later, we were like, whoa, we did okay. So in any case, so that and that is once again the same thing, right? So what do we expect? We expect a spare and then a return to the mean. Okay, so we see sort of despair, right? And a return to the mean. And if we now look, this is now the beginning of 2015. We peaked in 2014. All of 2013, all of 2014 we pulled back. So now let's just think back in history. 2017 we peaked. 2018 we pulled back. Now we're here. 2015 is now 2019 if we're working on this 4-year scale, right? What was this? Pow to pow, that was 84.2%. So in fact it was a bit more from end of rally in 2013 to sort of the depths of 2015. That was what, 84%. Okay, so beginning of last year, I wrote for Finweek, and I put an article in Finweek, I wrote an article for the Finweek, and in that article I was like, listen, this thing's going to come down to 80% or more. Wait for 4,000, then buy. Okay, that was my call then. So we'll see how I did. Okay, so okay, so this is 2014. Then we have now got now remember our blockchain halved in 2013, right? Then in 2016, our blockchain is going to halve. Sorry, 2012. So in 2016, our blockchain is going to halve again. I'm not sure exactly what the date was, but 2015, we are now going sideways. Boom, 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 boom. Right? Just going sideways, going nowhere, slowly. Eventually, there's a little bit of an uptick again, blah, blah, blah. That I think is just a data error. I mean, it goes to 0 literally. So we can ignore that one. I'm going to, at this point, make the graph a little bigger. And eventually we take out, at the beginning of 2017, we take out the high. Well, we come bloody well close to it, okay? So I'm going to draw that line in just for the sake of having it there. Bow. Right? Oopsie, let's make the circle bigger. It's not a circle, it's a line. And it's going to be pink because it's sexy. So in any case, somewhere in 2016, let's assume here, was the halving of the mining reward. Okay, now a year goes by, or as time goes by a little bit, suddenly, kapow! We take out, in the beginning of 2017, we take out this this peak, or this previous high. Now, what happens at the beginning of 2017? Here, people started paying a little bit of attention to it. Now, it's now kind of gotten to the point where it's just taken out this, so it's now again in the media attention phase. Like now people are starting to pay attention. Ooh, yeah, come on, let's pawn some cars. I got bitcoins to buy. And boom, 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 boom. We start absolutely marking off up the page again because it's on Bloomberg. It's here, it's there. Yes, it's 2,400 and it's only like April, May. And, like just 2 years ago, this thing, or 3 years ago, this thing was like, $1,000. It's now double. It's going to the moon. Blah, blah, blah. All those stories. And it just absolutely just does not stop. Okay. We have this huge correction, which is kind of scary, but boom, look at that rally. It just melts up the page. Right. And wait a minute. It's looking familiar again, isn't it? Right? So then it goes. Ooh, 4,000, hits 5,000. Boom, boom, boom. It just keeps climbing. I mean, 8,000, 9,000. Boom. Yes, it's 19. And it kind of makes it almost to 20,000. And here, once again, what was the insurmountable 10,000% rally, I'll have you know, 10,000%. Let's measure it, okay? From the beginning of 2013 to there is a whopping 9,899% rally. Where in your life have you seen anything like that before? From in 2013 that this thing went up, okay? Now, that looks like fairy dust, man. There is your 10,000% rally. That tiny little piece over there, compared to the colossus that stands in front of you. Ironically, this time around, the rally is not that big. From the beginning of 2017 to now is only 1,800, 1,900, call it 2,000% to round it off. So it's actually only 1/5 of the size. Eh? Let that sink in for a bit. But this is walking that logarithmic line with a couple of standard deviations on the other side, right? And we have the classic, we'll make it a bit bigger for the sake of reading the chart. We have the classic boom, we're all gonna die. Oh, that's not we're all gonna die yet. This is, no, I can't believe it's happening. Denial. Ah, no, okay, back to the moon, no problem. Ah, boop, sorry. Fucking, we took your ticket. The party's over. Go home. Between here and here is where most volume in the history of Bitcoin ever cumulatively has traded. In this area here, boom. December, yeah. In that block there is where the most volume ever in the history cumulatively has traded. All these speculators panic, and what do? They drop it like it is hot. There's a little bit of fighting, but at the end of the day, they just can't take it anymore, and they just dump it all the way down, right? And if you go and measure that, what is that? I'm going to take away our sexy pink line, wherever pink lines. Beginning of 2019 should be our low if our pattern holds, right? Because that was beginning of 2015. So we have from the high to, let's use that low over there, we have 83.22%. It is almost identical to what it was the previous time. So, look familiar? My thinking here is that this is a bubble, absolutely. But it is a bubble that is going to repeat itself every 4 years until, I don't know what happens, I don't know until when. Until all the Bitcoins are mined, I suppose. Or it's no longer useful. Or at some point, the extremes that it walks on either side of this logarithmic thing starts to become smaller, and in essence Bitcoin stabilizes once all the coins are, for all intents and purposes, practically mined, at which point it stabilizes. And then at what price? This thing is calling for $1 million a Bitcoin, almost $100,000 a Bitcoin by 2021 is what it's calling. So is that what happens? 2021, we're not done mining yet. We're closer to done mining by 2024-ish. 2040, I think, actually is more the time that we're going to be done mining. So where does it settle? I don't know. We don't know. There's no telling. But what I do think is, I think that we are seeing this pattern, right? This pattern that we all thought was the end of the world in 2014. That there was no more hope for Bitcoin. Nobody. This explains it beautifully, actually. This is also just something I found on Twitter, right? So what we have here is the Bitcoin cycle. So at the bottom axis here, we have 2013, 2014, 2015, 2016, okay? So that is that. Well, 2013. So that is that, okay? Where'd I put it now? Basically, in a nutshell, right? It's the same chart. So here you have point number one, area number one, flat area. Patient accumulation of Bitcoin by those who recognize the profit and or technical potential, or technological potential. Point number two, media reports on rising Bitcoin price, increasing public interest, and luring speculators into the market. Long-term holders and accumulators profit by selling to eager buyers. Point number three, this little pinnacle here. Price and sentiment reach a dramatic peak. Point number four, when buying frenzy can no longer be sustained, an avalanche of selling is triggered as speculators panic. And also, maybe because there's a little bit of excess supply that comes into the market, because at this point all the unprofitable miners are pushed out and they now become forced sellers because they've accumulated Bitcoin in the hopes of, it going to the moon, but suddenly they've got electricity bills coming out of their asses and they need to pay it somehow. So they got to sell their Bitcoins, right? And we have le crash, and then again, number one, patient accumulation, media picks up, everybody panics, patient accumulation, and we are now, we're going to fast forward here from 2014 again, all the way back to where we are today, and we have had our hype, we have had our absolute panic, and we are now once again in phase one, where we have patient accumulation before the next rally. So my call is this, okay? I reckon that this year we kind of consolidate, maybe between a couple of levels, and disclaimer, I am long Bitcoin at the moment, okay? So I would say, I don't know, okay? It's the Wild West out here. So I would say that level there is what, 6,000. So to be really safe, my initial call, based on historic movement, if it was ranging between sort of, I think it was 300 and 500 or 300, well, let's actually go back and look, right? We don't have to guess, we can look. During this period, it ranged between, what were the lows here? 187 and, what are the highs here? I'm going to use these highs, and 500, okay? So in percentage terms, that is approximately 145%. Okay, so it more than doubled and halved a number of times. So let's say it doubles and halves. Okay, so we're going to go up 145 to 150%. Oh my God, delete. Wait, come on. So from the lows, assuming that those are the lows, because if they are, they'll have to double bottom. Eh? Remember that. They'll have to double bottom. Well, they don't have to, but they might, and I'd say it's highly likely. And we want to go up 150%. All right? So that kind of takes us approximately back to these highs here. Right? So we range between 8,000 and 3,200. Or 8,000 and 4,000 was my call initially in the fin week. And we range in this range for the next year until 2020. After 2020, we slowly start creeping up because remember now early 2020 we have the halving of the blockchain, so you've got a supply side shock, so you've got people mining the stuff and being profitable, because what's happening is as the price comes down to closer to 4,000 or 3,000, miners exit the market, so the difficulty becomes easier, so those that are around are finding more blocks because there's less competition, which draws more people in, which then makes it more difficult again. And as prices oscillating up and down, people are entering and exiting the market all the time. Okay, they'll enter when it's high for reasons, they'll enter when it's low for reasons. It's like, but people are coming in and out of this. There's quite a dynamic supply and demand situation happening, and you have this like movement between 3 and 8 or 4 and 8 or 3 and 8 in this case. And then you have that supply side shock where it's like, okay, cool. You've now got, only half the supply on the market, because I was getting 6.5. I'm now getting, I was getting 12.5. I'm now getting 6.25. Shit, I'll double my prices. So you have a very quick movement from sort of 8,000, quick relatively speaking. It takes a year, right? It takes a whole year to get from 8,000, and it creeps slowly above this 19,000 all-time high, 20 grand a Bitcoin thing. And at this point, it's now 2021. And it is Bloomberg all over again. It is everywhere. It's on the news. Your granny's talking about it. Your granny's cat has even bought some. Once again, the oaks like all over. I don't know. Hairdressers. Everybody's just. So actually, I'm being very disrespectful. There's nothing wrong with hairdressers. Some of them are really truly knowledgeable. Although I will admit that I do know a hairdresser who did buy into some crypto mining pool and obviously didn't know shit. Anyway, my hair hasn't been cut in a long time. Maybe that's why I haven't gone back there. But anyway, long story short, it becomes frenzy again, and it goes absolutely parabolic. Where does it land? I don't know. I can't make the calls. I know that it should, from a mathematical perspective, this guy that worked it out, it was a really long, complicated article that a lot of it went over my head. But this is rooted in very really hardcore mathematics that this guy's done, based on how many coins are being mined, what price it needs to be viable economically for them to do that, what is the supply going to be like, blah blah blah. It's like a really it takes into account the difficulty of mining this stuff, and all sorts of interesting things. So that's calling for 100,000 by 2021. So how many standard deviations are we above or below that mean? Or above or below that logarithmic regression by the time we get there? That is what I don't know. Also, does it even get there? I don't know. But I don't think that if let's say we get 1/5 of the size of the rally we got if the pattern repeats. So we got 10,000%, then we got 2%. So what do we get this time around? We get, 2,000%. So what is 1/5 of 2,000? It's 500. No, it's 400%. Is it? 2,000 times 0.2, 400%. Okay, so 400% from where it enters into, which is the previous high. So 400% from 20,000. What is that, guys? That's 100%. No, I could probably just work it out, but I want to do it this way because I can. That's 300%. We're almost there. %. Okay, so visually, there it is. And once again, our amazing, incredible rally comes to look like a bit of an anthill. in the bigger picture of what I'm actually anticipating, what I'm calling. Yeah, so that's what, approximately $95,000 a Bitcoin. How many zeros are there? $950,000 a Bitcoin. Am I reading that correctly? No, $95,000 a Bitcoin. Call 100,000. It's 5 times 20, right? Yeah. So I mean, that's quite a big move. So, and I think that this is, if this theory makes sense to you, if you think I'm talking absolute garbage, let me know. Let me know what you think. Let me know what you say. I'd love to hear. Obviously, like I said in the beginning, I'm not an expert. I am merely a student trying to understand what I think is a huge opportunity. To give you a general disclaimer, I did a cool chart. I'll quickly do a chart for you guys. Yeah, I don't know, what the answer is, and obviously I would love to learn. So if you have a different view to me, or if you think I'm onto something here, like, let me know. Please tell me. I'm really open to listening to whatever you guys have to say, because at the end of the day, what I want to do is I want to learn more than anything. And the reason I want to learn is because, hell, if I can make 5 times my money in practically a year, then I'm going to be a buyer under 4,000, and I'm going to make more than 5 times my money. I'm going to make like a lot more times my money. It will be 10 times, it will be 8 times. Actually, how much would it be? Let's see. 100, 100, 1, 2, 3, divide by 4, 1, 2, 3, 25 times return. That's not bad. And that, if you are patient, you wait for 4,000 to come again, you accumulate below 4,000, and you sell at 100,000 in 2021, and you might get another chance to get in below 4,000 later this year if the theory and the patterns repeat themselves. Fractals, we'll get into that maybe in later episodes of the trading school thing. Then, there's a real chance that you can make like potentially colossal trade. Moving average, we're gonna put 1, 2, 3. All right, so I actually put this chart on Twitter. I actually put this chart on Twitter the other day, but I'm gonna put up another one. So I'm just gonna use blue and red because I'm lazy to change the things. 100, and we're going to use 200. So if you remember the moving averages lesson that we did like ages ago, we said that a bullish crossover of moving averages is if you have a 50 and a 100-day moving average cross while the price is underneath the 200-day moving average. So just putting away the MACD, which is like looking kind of bullish, right? It's for the first time in a while getting above that sort of midpoint. Starting to go. On balance volume is slowly increasing here. It obviously is trending down. The stock's been trending down, but it might be changing. So that could be an interesting situation. There's no real momentum in this thing at the moment, but in general, you have this sort of crossover that is relatively bullish, right? So this crossover took place while price was underneath 200-day moving average. That admittedly has given you a few false signals in the past, but this time it's actually busted up and broken through the 200-day moving average, and it hasn't pulled back. Here it's done that and pulled back in the same day. This is now day 2 that it's about like above the moving average, and it's gone on to make a new high today compared to yesterday when this little 1,000-point rally in an hour happened, right? So potentially this could be a medium-term buying opportunity, but we do know with such things that medium-term buying opportunities tend to be relatively messy. So we're like here, okay? Maybe here we might see a bit of a rally in this thing, but odds are we are going to come back down below all moving averages before we break up above again, right? Where's this thing? Bang. So we could maybe come up to what, 6,500, 6,000 is kind of like a safer bet. 6,000 is like a relatively safe bet. I'm looking for 5.5, and I'll take my money off. I bought yesterday at 50 at 4. I think it was 4,800. 4798.82, I think was my exact price. So I'm like not hugely in the money. Obviously, I missed the major opportunity, but I think maybe if it gets to 5.5, I'm happy to take my money. Maybe I'll be patient, wait for 6 or take half. I don't know. We'll see. Trailing stop situation. But what I'm a little afraid of is that we see a move back down to 3.2 to go and retest that low before we have a real trend reversal here. But that would suit the profile if we have a medium-term trend reversal using a 50, 100, and 200-day moving average, giving us an old school lack of technical analysis medium-term trend reversal, similar to what happened in 2015 when we made lows, right? So yeah, guys, that is officially the end of my story. So please let me know what you think. Please comment. Please tell me if you think I'm nuts. Please tell me if you think I'm right. Please tell me if where I can find a good green screen, so I don't have to have this weird lighting situation with a weird background going on anymore. And tell me what else you want to see on the channel. Also going to have lots of comments. All right, sorry, let's quickly work through them. Sorry. Do you think Bitcoin will be overtaken by other coins and mining rewards are halved? I don't know. I think Bitcoin has first mover advantage. I think, and this kind of ties in with your mainstream adoption thing. I don't think Bitcoin is the future of money. I think Bitcoin is going to set a precedent for how we are going to do transactions in the future. I don't think that is going to be Bitcoin. Bitcoin is great, but it has lots of drawbacks. It takes very long to do the transactions. It's like very slow. The blocks take 10 minutes. I mean, I understand that. What I envision is maybe different coins will have different values, much like we have different notes. A 200 Rand note has a lot more value than a 10 Rand note. So maybe Ethereum is like a $50 while a Bitcoin is a 200 Rand, right? Because for me to hand over my Bitcoin, it's going to take a lot longer. So I'm going to do it for a more significant amount of money, right? If I have to buy a house, I might pay for it in Bitcoin. But if I have to buy coffee, I might use one of the faster, more efficient altcoins that every minute gets a block added to its chain, something to that effect. That's kind of what I think. I don't know whether they'll be overtaken. I do think the first mover will be dominant for a long time, but we don't know what the future holds. So I don't know. I see that we have maybe multiple coins. Also, how long does it take before a central bank starts issuing cryptocurrency? We are starting to see banks messing around with it. We're seeing fucking WhatsApp messing around with it. Like cryptos are, what's going to be the standard? What we can hope for is like a gold standard, maybe a Bitcoin standard. I don't know if Bitcoin standard. I mean, it sounds crazy. So I don't know what happens. I don't know what happens. For this moment, and I'll take this thing here. At this point, Bitcoin is not money. Money has 3 properties. Money is a store of value, a method of exchange, and a unit of account. Okay. So a store of value. So I can put my money, my savings in money. Like I can go out and I can buy fucking keyboards if I want to and pile them up because keyboards have value. Or, hey, I can use this thing called money and I can stick in a bank account. And when I come back later, it's still going to be value to it because that's money, right? Bitcoin is like way too volatile. It has historically been too volatile. Yeah, okay, the argument is if you've held it for the last 5 years, you've made a killing, right? So, but if you've held it for the last 1, you've lost a fortune. So, can it be seen as a store of value? No, at this stage, it is not long-term stable enough at all. So, it's not a store of value. It is a method of exchange. Cool. Bitcoin checks that coin. I can give you Bitcoin in exchange for car keys or, services or goods, and you will accept them, and I will accept them. Hell, if you want to pay me Bitcoins for something, I'll take them, right? So it's a unit of a method of exchange, but it's not a unit of account because people go, Bitcoin is worth $5,157 right now. No. If it was a unit of account, we would be measuring things in Bitcoin, not measuring Bitcoin in things. Okay? We're measuring Bitcoin in dollar, Bitcoin in rand, Bitcoin in euro. We're not measuring things in terms of Bitcoin. What did this lamp cost you, Petri? Well, it cost me 27 Satoshis or 270,000 Satoshis or whatever the price is. We're not doing that. We're saying, it cost $29. you know. So it's not a unit of account. So that's why it's like it's not money. Will it ever become money? I don't know, man. I don't know. Gretchen, but thanks. Thank you very much. 6K is going to be a monster break. Man, I hope so. I'll put a ATR times 2 trailing stop loss. Watch the previous video on that and hope for the best, I guess. Decent video, different stage. Crypto development is whiteboard by... okay. A decent video on the different stages of... on the different stages of crypto development in the whiteboard by Charles Hoskinson. Fuck. Wow. That's a little embarrassing, actually. Hoskinson, the creator of Cardano blockchain. It is my chosen crypto investment, so I'm a bit of a biased fanboy. Well, thank you for disclaiming that. One of the first streams I've watched on your channel, and it's been great. I'm very glad you enjoyed it. Obviously, this stuff is like super new to me as well. I'm just learning. You know what? I like watching StarCraft on Twitch. So I was like, you know what? I'm just going to do this. And I know they're going to suck in the beginning a whole bunch, but they'll get better over time. So thank you for watching. I really appreciate it. I am open to any kind of feedback that you guys have. Now, though, I'm going for a beer with Simon. So I hope you have a wonderful evening. Oh, let me just check Discord. So we do have a Discord, guys. I'll add a little crypto room for the guys who want to talk cryptos in there. You are more than welcome to. The only rules are that please don't try and sell stuff in the Discord. That is cool, and don't be an asshole. Basically, you can do those two things. You are more than welcome to discuss whatever you want. And there's Simon. Yes, beer time. Thanks for watching, Si. All right, cool. I'll see you guys later. So bye.